We have 13-year highs with inflation rates. We have cost of living that's just becoming unmanageable, from the price of chicken to gasoline to housing, interest rates at an all-time low. And is this a speculator's wet dream right now? How are you playing this market?
I think you described it personally, just perfectly. I'm sorry. From my own belief, we are probably 40% of the way through a precious metals bull market, coming into an industrial materials bull market. So we're coming into a market where I think the wind is in the sails of everything we do, and the stocks are going down. It's as though there was, well, it's not as though this is an asset class that I want to own more of, and my entry price is getting cheaper. It's odd that most investors and speculators require price gratification. In other words, the price has to be going up to reinforce their sense of faith in the narrative. What I have learned in my life is that there's a sort of one period every 10 years where the wind is in your sails, but the price of the assets that you'd like to acquire is falling. And I think we're in precisely that circumstance now. But my suspicion is that the trend continues, which is to say, I think that tax loss selling this year is going to be particularly aggressive. I think that in the very near term, the US Fed has the opportunity to allow interest rates to continue to rise, which should hurt gold more. So despite the fact that stuff is cheap, I think it's going to get cheaper. For me, stuff is cheap enough. I'm going to begin to buy, and I'm going to continue to buy as long as things are inexpensive. I made the mistake in the COVID-related sell-off of thinking things were going to get cheaper yet. Then I missed some real bargains, which still bothers me. And so if I pay a little more than I might otherwise have to buy companies that I plan on holding for 4 or 5 years, I'm okay with that, Arash. In fact, I'm delighted.
So Rick, listen, my viewers would hate me if I didn't ask you this, but you mentioned tax loss season is upon us. If there's a bin here of discounted stocks, just stocks that are cheap, too good to pass up on, are there any that you're picking up or considering for yourself?
Let's start with categories before I name names. And I want to say, Arash, these are not investment recommendations. An investment recommendation, when it's going off to a group of subscribers as long as yours is irresponsible, because I don't know these people. So understand that what I'm going to tell you now is what I'm doing with my own money. Don't confuse this with an investment recommendation. You know, a year ago, Arash, people couldn't own enough of the junior royalty and streaming stocks. They wanted to own them at any price. And they wanted to own them for good reason. Royalty and streaming companies are good businesses. They don't have sustaining capital exposure. They don't have operating costs. They don't have construction capital exposure. Characteristically, the operating margins in the business exceed 80%. As opposed to 15 or 20% for operating margins. They're really good businesses. And some of them have come off 50% in price. I wasn't able to buy them a year ago because I could add and subtract. I liked the narrative, but I didn't like the math. All of a sudden, nobody wants them, and they're for sale for 50%, 40 or 50% off. So that's attractive to me. I look as an example at Sandstorm, which is from my point of view, one of the sort of legacy junior royalty companies. You look at the stock chart of this, it looks like a brick thrown off the Lionsgate Bridge. It's difficult to explain why that is. Perhaps investors who didn't realize that Turkey was a country, thought it was a bird, are nervous about Hod Maden, a deposit which they incorrectly place on a bird as opposed to in a country. But that might be, well, that isn't a name that I'm looking at. It's the name that I'm hoping to buy.
If prices get lower.
Yes. The great Canadian oil and gas royalties, ARC, Freehold, Prairie Sky, they are all trading as though oil were priced at $40 and gas was priced at ACO $1.50, but gas is priced at $5 ACO and oil's $80 US. So those great Canadian oil and gas names, particularly for Canadian oil and gas investors, Canadian-based oil and gas investors, not for traders, but for somebody who proposes to hold a stock for 3 years or 4 years or 5 years, but particularly people of my age who like income, dividend income, sustainable dividend income, I think need to look at those names. Osisko Royalty, which had a change of management and became much less aggressive, which I think is a good thing, is also off by 45%. These mines, Detour, Eleanor, are the classic Archean gold deposits in Eastern Canada. Very, very, very long-lived mines. And the idea that I can get an operating royalty on 2 tier 1 deposits at 40% off, I think is attractive to me. You know me, Arash. I love the old Wayne Gretzky hockey analogy, which is that he became a great hockey player, not because he was the strongest guy or the fastest guy or anything like that, but he was the smartest guy. And he said, you don't skate to where the puck is. There's a bunch of big guys, mean guys with sticks there. You skate to where the puck is going to be in your mind. In other words, you stay out of the fray. And so I see the exploration sector as one that the market perceives as being risky because the market got so expensive. It's getting cheap too. So advanced exploration or development stories like Integra, I think bear mention. In fact, my former employer, Sprott Inc., at the Sprott US level, has a list of 45 focus stocks. That is to say, companies mostly under $1 billion in market cap that they think are much more attractive than the 2,000 listed companies worldwide in the mining space. And right now, they are in the process of overprinting their focus list with a graph of companies that have fallen by 40% or more in the last 12 months, trying to distill the 45 companies they'd like to own and find the 10 or 12 cheapest of those companies, which is precisely the type of discipline that I think that your readers ought to impose on themselves. Make a list of stocks that they want to own, and then make a list of prices where they would be delighted to own them at.
Rick, this Sprott 45 list, how do we get a peek at this list?
That would be difficult to do. I know that many of your listeners are in touch with Sprott. Anyone who wants to become in touch with one of the Sprott salesmen can email me, and I can cause that to occur. And I should say that, you know, the list is fairly specific. Our tastes at Sprott lean perhaps towards silver, because we think in the later half of a bull market that silver outperforms gold. It leans too, not so much to the 10-cent stock, which could be promoted to 45 cents, but rather the $2 stock that we think is worth 450 and could become worth 7 or 8. You know, it's a value-oriented list. It's also a list that leans very heavily towards people who we have done business with in the past, who we know to be superior human beings, both in terms of work ethic and ethics generally. So this list might not be for everybody, but for people who have a value orientation and people who are more interested in arithmetic and science than they are narrative, it's very worthwhile.